So, welcome back. I'm Paul Unger, editor of PlaceTech. Today, I'm joined by Michael Tsourounis, managing partner of Hazelview Investments and co-head of real estate, and by Roger Poirier, co-founder of Hazelview Ventures, the new VC arm of Hazelview, which started a year ago. Bit of background in terms of Hazelview: they employ a global investment and asset management team of more than 80 people across offices in Toronto, New York, Hong Kong and Hamburg, and manage a portfolio of assets under management of 11 billion Canadian dollars. So we want to get behind the headlines in VC and property deals in this series and understand how you get started along this path and also how it's going and some of the lessons learned, the good, the bad, from real estate getting into tech investment. So I'll start with you, Michael. How did you get started on this journey into tech investing from a real estate perspective?
Yeah, thank you. I think for us, there wasn't just an aha moment that happened at a point in time as the market for property investment has become more and more efficient. We really started to look at going, okay, well, we know what we can do to the physical asset side of it by way of renovations to a property to make it more, whether it be visually enhanced or better monetized, et cetera, for our clients and customers. But then started looking at, okay, well, now how can we take that one step further and use technology to help improve our operations, to help improve the efficiency of an asset, going forward. So, as ESG has become a much more relevant theme in property investment, looking at ways, where could we use technology to perhaps improve energy efficiency? Where can we use technology to reduce waste? Where can we use technology to, enhance a customer experience? So, as we continue to kind of always look for ways that we can add value to our properties, and by adding value, it's where is there a positive impact for our tenants and for our customers, and ultimately where is there a positive impact for our investors, and where is there a positive impact for the for the economy and the environment as a whole. So it's something that has probably evolved over the last number of years. And I think, with a lot of things during the pandemic, a lot of trends, were accelerated, and we really shifted a focus to accelerate our thinking in terms of how we can use technology and the like to improve our offerings.
Okay, and I guess that's where you come in, Roger, in terms of the investment side around tech.
Well, it's interesting. As Mike suggested, we're rather atypical from a VC perspective. So I jokingly say we're VC on training wheels because our primary objective is really to enhance that of our investors in the real estate businesses' returns, and then we focus on helping entrepreneurs really drive their initiatives while testing and scaling on our platform, on our real estate platform. So it's a little atypical in the sense that we are very, I would say, results driven, but more solutions results driven than immediately financially results driven.
Okay, and what's your sort of scouting process? What's the criteria when you're looking for potential investments?
Well, I think it's evolved a little bit and in a very short period of time, because a lot of the things that we would think of as prop tech tenant apps, all of the handheld device type of initiatives are quite ubiquitous now. And so our focus is really more on, I think the bigger bang opportunities are more on the build tech side. And combining some of those with the prop tech initiative. So, our primary focus for investment is it something that our team of experts believe that we can really benefit from as an organization? And two, is our involvement going to have a material impact on the company?
That's great. So, in terms of how you've organised yourselves internally at Hazelview, I find this the management side of prop tech and build tech really really interesting of how organisations handle this, because it's not easy for property to innovate. We've all heard about how slow it is to adopt new ideas. How have you approached this as an organisation?
Yeah, I mean, I think from our side, one of the benefits that we have at Hazelview is having a fully vertically integrated platform from the property management side to the development management side to the investment side. So we're able to take advantage of the size and scale that we have on our platform. Um, we work with our operations team really to kind of test pilot some new ideas, some new technologies that we're working on, test them in a regional or local marketplace, understand how they're working, where they're efficient, where perhaps they're not, and really understand what's the value driver for the end customer, the end user with that technology. So we typically, will work to go ahead and pilot that on, a smaller subset of properties within our larger portfolio, and then we have the benefit of scale of being able to roll things out nationally over throughout Canada across our entire portfolio. So that kind of gives us the benefit of starting small, understanding how it works, and then rolling that out. And then our belief is that's really the value add that we feel that we provide kind of throughout the value chain, both to the companies who we're looking to help support, and then back to our residents, customers, tenants, and investors of how that can work. Because if it's something that works really well on our platform, whether that be on the build tech side of assets that we're building or on the operational side for efficiencies, we have quite a bit of conviction that will also serve to work well for others. So it kind of gives us, a really great launching pad for it, and we're able to use our platform to do that.
And talk to us about the investments you've made so far. Is it three companies? Is that right? And what results you're seeing from those? Are there any that are really working well?
Yeah, so I can take that, Mike. I think so. We've had three. We've got an end-to-end process, marketing and leasing company, which is a software platform called Renty, and they started when we looked at them initially. They were in, I think, 12,000 doors in Canada. That was about a year ago. They're now in 60,000, and we're rolling them out across our network currently. And so that means that the pilot's gone really well. So that one is doing quite well. We have another which is called Sweet Spot, which is an all-in-one mobile application to manage complete make-ready process inspections and documentation, work orders. They've actually broken out of Canada and are doing well in the US as well. So that one we are working with system wide. And then the last and probably the highest impact is actually a build tech called Augmenta, which we just press released that came out of stealth mode recently. And it's generative design for buildings. And really, really, really exciting for us with a bunch of news coming. So, still early days in terms of the adoption here in Canada, but I would expect that their first pilots will come out shortly.
And what was the thinking around the decision to go down this route of having your own venture firm rather than invest in an existing prop tech VC fund like a lot of people do?
I'll let Roger further elaborate. But one of the things, again, that why we wanted to be more active in the space as opposed to being an investor is, we feel we have the platform where technologies can be sort of beta tested through our platform. So when we looked at it, we said, yeah, we could go ahead and invest in other companies, other VC funds, and they'll turn around and probably want to use the real value that we have, which is that platform to test something on. So it seemed a bit counterproductive to give capital to someone else to have them use our platform to test a product. So we felt with the size and scale that we have, it would probably better suited for the entire process for us to be an investor directly into the company who has that supporting technology, and allow them to use and try it on our platform, like I said, and with lots of conviction that if it is really working here, that's something that can be rolled out across to other users and participants.
Okay, great. Roger, did you want to add to that?
Yeah, I would just say this allows us to really focus in on the applications that are most compelling for us as a company, and so we will invest in fewer companies, and I can get into why that happens, but it's really just simply onboarding bandwidth limitations. But we go really deep with the companies we invest in. We really help them, and if we're investing and onboarding them, we really care about that market segment. And so it really allows us to focus our efforts.
Yeah, sure. And is there a sum, is there a figure for the amount of money that you've set aside for a pot for this initiative?
I would say that we're working off of a rolling close because as we see investments that we find compelling, I would suggest for good ideas, there's always money. And so our typical investment size is between 1 million and 4 million USD, depending on when in the process we're investing.
Okay. And would you see yourselves bringing other investment partners in with you?
So we do have external investors, but they're all part of the real estate or builder construction ecosystem. So I think some of our investing partners are really interested in just having us do the legwork, and then if it's compelling enough for them to start onboarding it themselves, as we've done with two of our portfolio companies as well already.
Okay. And any names that we would know? Anyone you want to mention and give a name check to that's investing alongside?
I don't think we're in a position to do that, unfortunately.
Okay. And how long would you see yourselves staying in? Is there a sort of exit plan for your investments?
We're not really focused on, as I said, I think we're a little different and a little more pragmatic in terms of what we deem success for our investments. Our primary objective is to ensure that whatever applications we're investing in really help our LPs and our organization overall. So that's the first, I think, check mark for success. And then if that happens, the financial output and gains should follow. And we're also not constrained by, which are we investing in pre-seed, seed, A or B. We can invest in any of them, and we also plan on follow-on investment. I think the next money you put in once you've been that close to a situation and know how well it works is actually easier money to put in. So we actually expect to co-invest, and we're not so worried about the exit, frankly.
Okay. And Mike, any lessons learned where you've maybe got things wrong or things that haven't worked out that you would advise other people about if they were to follow the same path?
Yeah, I mean, I would say the lessons that we've taken to heart is really when looking to onboard something, starting small with that pilot to get it fully integrated into our platform. I think if you go too broad too quickly, you really need on the operational side to have engagement from all your internal stakeholders to want to make that technology a success. So I think starting it off small, piloting it well, and kind of working the kinks out, so to speak, is what we found to be pretty successful, and that's really the approach that we continue to employ as we go along. And really spending a lot of time up front. Roger and some of the team who works with him and our operation team spend a lot of time up front, really understanding what is the value proposition that the investment is going to have for us as operators. What value proposition is it going to have to our end customers and our end tenants? And how is that value proposition really going to drive to our overall goals and objectives with these investments and our broader portfolio going forward? So we see a lot of really interesting ideas, but taking the time to really vet and understand the value prop, I think substantially reduces any time you spend going down the the rabbit hole on something that just may not totally align with with the objectives that we have.
Yeah, and has that helped with overcoming any potential resistance from people that are really doing, like you say, the operational teams that are doing these tasks on the ground to get them to buy in and use these new tools?
Yeah, for sure. I mean, our operations team is the one who's on the ground and feet on the street who are implementing, if it's a technology that's being used at the property operational level, or a development team, if it's in build tech, they're the ones going to be working with trade partners, etc. So, really having them understand the value of the technology and the value that it'll bring is really key in order to get their engagement level high and to get them excited ultimately about using it. So, a lot of communication and education around that component at the onset, I think really fully utilizes and maximizes, if you really like the technology, its ability to be successful on the platform.
Yeah, absolutely. And where would you say, when you look at your peers in Canada and elsewhere where you're active, where would you say that property, that real estate and construction is in terms of how far advanced is it along this journey into digital transformation?
I mean, I feel if we look around at our peer group, I'm gonna say, but it's probably more my story. It feels still relatively in the infancy of where we're going. Potentially lagging a little bit behind some other countries, but I think technology, especially in Toronto, with the tech talent that we have here, is really picking up, and the speed at which it's accelerated over the last few years has been remarkable. The technology scene in Toronto and Canada has really seemingly exploded. So, perhaps where we were a little bit behind, I think we're doing a great job catching up on it. And I think there's a lot of really great ideas and concepts and technologies that are out right now. Unfortunately, I think a lot of them are still in a proof of concept stage where you're trying to understand, you potentially can have a measurement on what the benefit is, whether that be on it's something on the build tech side with regards to improving energy efficiency, reducing greenhouse gases, etc. Still a little bit hard to quantify the return and the economic benefit of that right now. There's the environmental and the social benefit of it, which is it can be a little more qualitative and easier to maybe perhaps define, but it's still understanding what is the actual return on investment that a lot of these technologies are providing. I still think that is still very much in the early innings of understanding what works and what provides a really good return, because ultimately that's where we want to invest our capital dollars, is on things that will not only have a great environmental and social benefit, but also provide our residents and customers great experience, and also provide really strong returns on our investment.
Sure. And Roger, having come into a property focused role 12 months ago, how would you rate the state of the digital transformation and the take up so far in this industry?
Well, clearly it's early days, but there's certainly a great will to move this forward, and we certainly see it in the Canadian ecosystem, and obviously it's the same in the U.S. and in Europe. So we think there's a great desire to drive it forward. As Mike said, we've got great talent here in Canada, and I think you're really going to see it accelerate. We're quite excited about it.
Yeah, absolutely. So, just to close, are there particular pain points within the business that you've identified? Right, the next year or two, these are where we're looking for tech solutions to these problems within the organization that you're going hunting for.
There's been I think globally, as everyone's experiencing quite a bit of inflation on the global side, building costs have risen materially. So understanding where prop tech can lead to to more to greater efficiency and less waste ultimately in that space that can hopefully reduce some of those building costs, as things such as carbon taxes, etc., that are considered on greenhouse gases, where you're able to significantly reduce that and try to get assets down to, as people move towards targets to reduce those as much as possible. Those are things that are going to be, very impactful, and I think will continue to be, very much focused on over the next number of years, because they're going to result in they do result in material costs, and can significantly affect performance at the asset level. So I think that is a focus on technologies that can improve energy efficiencies once an asset is built, technologies that can be incorporated into the design as you're building, and technologies that can prevent waste. I think are going to be very important, and things that are much more relevant than just your basic consumer consumer applications or consumer experience things. I think the other side is going to be bigger.
Sure. So no pressure there then, Roger. You've just got to solve inflation.
I was going to say that the nice thing about some of the focus areas that Mike's touched on is that there are only so many things that you can throw at your property management team at any given time, and that's the bandwidth issue I was telling you about. So we can look at adding 1 or 2 new companies a year into that big process. But when it comes to retrofitting new build, we can look at many, many different companies and applications, and that gives us greater kind of scale and breadth of opportunity. So that's really a big focus for us, and we're really excited by companies that we're already seeing right now that we're looking forward to investing in and using in our processes.
We look forward to covering those stories when they come along, when the deals are done on PlaceTech. Thank you to Mike Tsourounis and Roger Poirier from Hazelview for joining us today. Thank you, guys.
Thanks so much.
Thank you.